Kirk Duckwell here with your Market Tuesday. Hey everybody, hope you all had a great 4th of July weekend. Bringing this video to you a day later than normal as I was driving back from the Canadian border yesterday. All right, so today we're going to talk about why the market doesn't have to go down, even with the uncertainty with the economy and the high unemployment rate. If you like these videos, click on that subscribe button. We know that knowledge is power. The more information you have, the more you can leverage the market to your advantage. So again, click on that subscribe button. Let's dive into the data. Okay, so as predicted, the sale prices bounced back up from their previous April high, which was at 305. The median is back up to 304.9. The average actually surpassed April's high, which was 341.559, now up to 347.658. And this is due to the extremely low inventory. Supply and demand. So even with that high unemployment rate, the supply is so low that is why we see sale prices continuing to increase. So supply down 31.3% over the same time last year. And buyers aren't really withdrawing themselves from the market either. We're still running on 4 weeks at 29% faster pace in that median sale price range, showings per listing at 5.3 for the 200 to 400K price point. Last year at the same time, that was at 4.3. We can also see, we talked about people holding back on their listings, so the coming soons is sitting pretty high in that bracket, previous week at 31 up to 59. We're also seeing the pending sales. Again, keep in mind this 200, 400K Minneapolis Saint Paul area, that's also up. So with that pending sales up, that's keeping that inventory low, keeping the pressure on the market. Another driving factor is those extremely low interest rates. Those are currently holding stable week over week, still at 3.13. And forecasted, we have some updates on that. Looks like expected to rise ever so slightly throughout the month and continuing to go up just a little bit up through October, where then it's maybe predicted by November to go up more. But if you watch these forecasts, they don't always hold true. So I guess what I would say is looks like they're going to stay relatively stable. Keep an eye on that piece. Okay, the market meter. This is that new thing that I introduced a few weeks back. So the market is very, very strong in certain sectors. And I said I'd bring different sectors each week. So let's go back to that median sale price range, where we're at. So the market meter has moved up week over week. So last week it was around 7.5, and now we are up to 8.68. So yeah, really strong seller's market for single family homes in the median sale price range. However, every market is a little different. So if we look at condos, they are not having as great a year. That market meter is sitting at a 4.28, so kind of in that stable market range, leaning towards a buyer's market. A very different story on that condo market. So if you ever want me to break down this calculation for a particular sector that you're looking in or thinking about selling in, I'm happy to do that. It's a pretty easy formula I can run for you. Now, where do I see the market going? Well, for that median sale price range, I think we're going to maintain pretty strong here over the next couple months. As we approach election time, things may start to slow down. That is pretty typical. So we might start to see inventory build up a little bit, but with as low as that is, it's going to take a lot to slow the marketplace down. So buyers, got to be patient out there. Wait for the right place. Make sure you're taking your time to analyze the properties correctly. For sellers, yeah, great time if you're in that median sale price range. However, if you're not and you have a property that's in a different sector, again, feel free, reach out. Happy to show you where those properties lie. Hopefully you found this information helpful. Again, click on that subscribe button if you have any questions, you can always reach out. Take care. Be safe. Have a great week.